The live price for Beyond Meat Inc., trading under the ticker BYND on the Nasdaq, is currently 0.86 USD, reflecting a slight increase of 0.0065 or about 0.76% today, January 28, 2026. While a sub-1% move on a stock trading in the 80-cent range might seem like total stagnation, it actually marks a moment of extreme tension as the company fights for its very existence on the Nasdaq exchange. The insight that most casual observers are missing today is that Beyond Meat is no longer just a food company. It has become a restructuring play. Just 2 weeks ago, the company launched its first functional beverage line, Beyond Immerse, marking its first major pivot away from the saturated and declining plant-based burger market. The market is currently pricing BYND as if it is a foregone conclusion for bankruptcy, yet the reality is that management is frantically diversifying its portfolio into high-margin liquid protein to find a bridge to the second half of the decade. Expectations for Beyond Meat have collapsed from its high-flying IPO days when it was seen as the undisputed leader of a food shift. The common belief today is that the plant-based meat category was a passing fad that has permanently been rejected by the mainstream consumer due to price and taste parity issues. The reality, however, is that while the burger segment is dying, the global plant-based market is still projected to hit $21 billion this year. The contrarian take is that Beyond Meat's aggressive move into beverages, a category with much higher turnover and lower supply chain complexity than frozen meat, could be the Hail Mary that the market is ignoring. For those looking for investment help or checking their individual brokerage account on the Robinhood app, the question is whether this 0.86 USD floor is a trap or a once-in-a-decade turnaround opportunity. When you look at the recent price action, the stock has been pinned under the $1 level for several weeks, creating a significant risk of a delisting notice. To combat this, the reality of the situation forced a massive six-fold increase in authorized share capital earlier this month, moving from 500 million to 3 billion shares. For an investor using online investing sites or managing a portfolio through SoFi Invest, this is a clear signal of impending dilution. Management needs a massive cash infusion to service its remaining $35 million in convertible notes and to fund the rollout of the Beyond Immerse line. The tension here is between the existing shareholders, who are being diluted into oblivion, and the company's need to survive. If you are using a Fidelity trading platform or Interactive Brokers account to monitor institutional activity, you'll notice that while big money is largely absent, short interest remains exceptionally high at nearly 28% of the free float. The recent momentum was briefly sparked by the early settlement of over $200 million in convertible notes in late 2025, which significantly cleaned up the balance sheet. However, the cost of that cleanup was a 413% surge in the number of outstanding shares. This is the classic expectation versus reality struggle for BYND. The expectation was that debt reduction would save the stock, but the reality was that the massive dilution destroyed any hope of a price recovery in the short term. For someone self-investing or using a Schwab Intelligent Portfolios account, this stock currently sits in a high-risk bucket where technical indicators like the Relative Strength Index, RSI, are screaming oversold, yet the fundamental picture remains clouded by a 21% decline in U.S. retail sales reported in the last fiscal quarter. Beyond Meat's business model is undergoing its most radical change since its founding. For years, the strategy was focused on the Beyond Burger and Beyond Sausage through massive partnerships with McDonald's and Taco Bell. The reality is that those partnerships did not deliver the consistent high-volume revenue the market anticipated. Now, under the leadership of CEO Ethan Brown, the company is pivoting toward functional nutrition, The Beyond Immerse line, which features pea protein, antioxidants, and electrolytes, is a direct attempt to compete in the energy and recovery drink space. This is a higher margin category that doesn't require the expensive cold chain logistics that have plagued their meat products. If you use the Robinhood trading platform or an interactive broker's account, you are watching a company try to turn itself into a beverage firm in real time. Comment below how many shares of Beyond Meat you currently hold and whether you would actually buy their new protein beverage Beyond Immerse. Do you think shifting into the drink market is a genius move to save the company, or is it too little too late? Looking toward the future, the primary catalysts for BYND in 2026 will be the Q1 earnings report in May and the potential for a reverse stock split to regain Nasdaq compliance. The expectation is that the company will continue to burn through its remaining cash, but the reality will depend on the velocity of the new beverage launch. If Beyond Immerse can secure shelf space in major retailers like Target or Walmart by the summer, the revenue trajectory could finally stabilize. However, the risk of a securities lawsuit, currently progressing through the courts regarding alleged concealment of inventory write-downs, remains a major legal overhang. For investors using online investing tools or a fidelity brokerage, these legal risks often carry more weight than the product launches themselves. The history of Beyond Meat is a cautionary tale of what happens when a market narrative gets too far ahead of operational reality. At its peak, the stock traded at $235 USD. Today, at $0.86 USD, it is a shadow of its former self. But the tech behind the product, the ability to isolate and texturize plant proteins, remains world-class. The company's past performance in the European market, particularly in Germany and the UK, has actually been a bright spot, with revenue holding up better overseas than in the domestic US market. This suggests that the brand still has global legs if it can just figure out the right product mix. For a trader using the Robinhood app or SoFi Active Investing, the play is no longer about meat alternatives, but about brand survival. In summary, Beyond Meat Inc. is a company at a total crossroads. The 0.76% gain today at $0.86 USD is the calm before a potential storm of more dilution and restructuring. The expectation that the plant-based burger would replace beef has been replaced by the reality of a company fighting to stay listed on the Nasdaq. The central insight for 2026 is that the beverage pivot is the last line of defense. If you are trading through interactive brokers or holding through a Fidelity IRA, the metrics to watch are not just pounds sold, but liquid ounces shipped and the status of the authorized share expansion. Expectations are at an all-time low, which in the world of contrarian investing is often where the most interesting stories begin, though for BYND, the margin for error has narrowed to zero. Would you like me to analyze the recent 8K filings to see the exact conversion price for the remaining convertible notes to understand where the next level of dilution might hit? Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.